So you hear people say, I lost 10 million naira in trading, I lost 100 million naira in trading, I lost 1 million, I lost 500 million, I lost 100,000 naira, I lost 50,000 naira in trading. And you begin to ask yourself, if people are losing this kind of money in trading, why do people still say trading is good, is a good way to make money? Is it not a scam? You begin to ask yourself, is trading not a scam? Is crypto trading not a scam? Well, crypto trading is a legitimate way to make money online. And if you understand what you're doing, if you know what you're doing, you can make good money. I mean, real good money trading crypto. I have seen people, including myself, turn 30,000 naira, 50,000 naira, 100,000 naira to millions of naira. I have seen that happen. Even in my academy, people are turning $10 to $100, $50 to 500, just like that. And people are still making good money, even in my free group. So if you are not in any place that will teach you the exact thing to do about this thing and you just jump into it, chances are you just have what we call the beginner's luck. When I started trading in 2017, when I started trading, I also had what I call the beginner's luck before I had to sit down, paid a mentor who actually taught me what to do. And then today, the story is a different thing. Anyway, in this video, I just want to talk to you about risk management so that you will understand what it is before you start criticizing crypto trading or feeling that crypto trading does not make sense. You need to first of all understand that you need proper risk management. With that proper risk management, if you like fund 1 billion naira, you will lose it. With that proper risk management, fund $1 billion, you will lose it. See, the market is big enough to swallow any amount of money you have. Let me show you. Because people feel, if only I just have $1 million, if I have 10 million naira, if I have 100 million naira, I will not lose it. You will lose it if you don't know what you're doing. Now, let me show you. Let me come back to the market. This is the market. You can see here. That is $2.6 trillion that is inside crypto market. You've seen it there. $2.6 trillion inside crypto market. Now, how much do you have to bring to this table that cannot be eaten up? Late December, this amount was around $3.1 trillion. $3.1 trillion. But right now, it's sitting at $2.6 trillion. That means over 500 billion has been liquidated, has been taken out of this market. So how much do you have that will not be taken out? So it just means that the only advantage you have in this market is proper risk management, which is why I tell people, when you come to crypto trading, first of all, understand that before you trade, you need to know how much you are comfortable losing. That is why we tell people this is not a financial advice, so that when you lose your money, you don't come back blaming me as your instructor or as your mentor that I made you to lose your money, because you will lose it if you don't know what you're doing. So you need to understand that before you invest, you must be comfortable. That is why we say in trading, we have what we call risk to reward. This is risk and this is reward. You get? So you need to risk. You first of all risk that amount before you see the reward come to you. So if you're risking, if $10 is what you're comfortable losing, and you risk it, when it goes, if you lose it, eventually lose it, you are not disturbed that you have lost $10. First thing you need to understand, comfortable. You need to understand that you must be comfortable losing that money before you can trade with that money. Don't say you have $100, that is all you have, and even if you lose the $100, there's no way for you to get another money. And then You see a trade because you feel, oh, you are in my group. Like someone was saying in my group that my signals are shop log, and so far all my trades have been going since he joined. Everything has been going. Any trade I post, it plays out. Any trade I post, it plays out. And then because of that, you've just take $100 and you want to just enter one trade with $100. You don't put stop loss. You don't put TP. That money will go, and you cannot hold me responsible because I have given you everything you need to know. So don't do that. Risk is if you have $100 and $10 is what you're comfortable with, use $10 to enter the trade. So proper risk management must be applied when trading crypto. Whether you're buying sports or you are trading futures, apply proper risk management. So what is risk management and how do you apply it? First of all, I've told you the first thing in risk management is understand your comfort zone. Know your comfort zone when it comes to your what? Your money spending this thing power. If $10 is what you can spend and you let it go, know that that is your comfort zone. If $50 is what you can spend and let it go, know that that is your comfort zone. If $1,000 is what you can spend and let it go, know that that is your comfort zone. That is the first thing. Second thing, know your what? Your leverage level. If you're trading futures, what is your leverage? If you trade with $100 and that's your comfort zone, but you don't want it to just go like that, you don't want to lose it like that, then reduce your leverage. Instead of risking using 10x leverage, reduce to 5x leverage. Those are risk management. Reduce to 5x leverage. If 5x is too much, reduce it to 3x leverage, because 3x leverage with $100, if it goes in your favor, you can still make $30, $40, $50 in return. So risk management plays a key role when it comes to growing your account, making your account stable. Without proper risk management, you will see that you have $100 today and use it to trade. Tomorrow you lose the $100. There's um there is a group that I am in, a trading group that I am in, and I see people come to that group every day, fund $50, fund $100, fund $20, and they lose it that same day. It doesn't make sense. Those people don't apply risk management. So you must apply good risk management. Know your leverage level. Then the next thing about risk management is to know your stop loss level. You must trade with stop loss. Don't just be like the man that will go to his house, open his door, enter and sleep without closing it. The thief will come there and take away everything. That is what stop loss helps you to avoid. So you must know that when you're entering a trade around here, you must set your stop loss. Some people enter a trade and they don't set stop loss. I've seen some of the people in my group send me trades that they've entered, and I see it saying set stop loss and TP, and I'll be like, why have you not set your stop loss and TP? If you come to our group on Telegram, let me just open it. Let me just open the. And by the way, if you're not in the group, if you're not in the academy or the free group, our Blockchainplus free group, do well to join the group, because you are going to make a whole lot of money from that group. Now, if you look at this trade here, you can see I put SL and TP. So I give you SL, I give you TP. Why did you not set the SL? Why did you not set the TP? Because that is one good way, one fast way to lose your money within a twinkle of an eye. So you must understand risk management. In risk management, SL, stop loss, and TP are key factors when it comes to managing your risk. Then, one important factor about risk management is the way you utilize your money. So we always say don't use more than 2%, don't risk more than 2% of your total equity. So let's say you have $100. So don't risk more than what? 2% means don't risk more than what? Think it should be $2, right? Now, this rule, you may say it may not apply to you because your money is $100. So instead of saying don't risk more than 2%, then you can now say don't risk more than 10%, which is just $10. Because you know, of course, it's $100 that you have. Now, for a person who have $1,000, 2% may now be $20. You understand? That is the general rule when it comes to trading. because you are not here to chase the trade and get rich quick overnight. You are here to use this your $1,000 to be making profits on daily basis or on weekly. So if you trade, for instance, if you join my group where we trade, where we do this trading, and you are trading with $20 um with every trade that you enter, you will realize that at the end of the week you might just have made $50 or up to $100 at the end of the week. You get? So for instance, if you look at trades like this kind of trade giving you, this one even went ahead to do more. I think this is it. See it here, 420%. So with your $20, you've made over how much? Over $80. That's one trade. This one did, for this person, this one of the person in the group did 75%. So with your $20, you've made $15. So instead of trying to risk all of the money at once or risking too much money at once in a trade, why not reduce the risk? So if you say $20 is too small because you have 1,000, you can now move it to, let's say, $50 maximum. Don't use more than $50. So these are the risk management that you need to understand. How much are you using from your account to trade per trade? Because you might enter like 5 trades, and the 5 trades all will hit your stop loss. So if you are using $50, that means the 5 trades you have lost $250 already. So you see how it happens. Just like I was watching a story about someone who entered it, who funded, I think, was it 2 million naira, and then he entered the first day, he made money. The second day, he almost blew the account. The third day, and before you know, the account from 2 million was remaining, I think, 100 and something thousand naira. That is because the person did not apply risk management. Because if you have 2 million naira in your account, the maximum you can use to trade at a go should be 100,000 naira. 50 to 100,000 naira. That is the maximum. So risk management is key when it comes to trading. Now, how do you apply your risk to reward ratio, which is the last thing I'll talk about when it comes to risk management? This is risk, and then this is reward. So how do you apply your risk to reward ratio? Now, for you to be sure that over a certain period of time as a trader, you are in profit, you need to use proper risk to reward ratio. Now, the proper risk to reward ratio, the minimum is 1:2. So it means that when you losing $10, for every $10 you lose, make sure that if you're making profit, you're making at least $20. That is the standard. You get? For every $10 you lose. So if your stop loss is, let's say you enter a trade and your stop loss is, let's say, 50%. Your stop loss is 50%. Then your take profit should be at least 100%. That is the proper risk management. You get? Your take profit should be at least 100%. Now, that is the least. For me, I go as far as doing 1:5. 1:. I've even done 1:17. Yes. 1:17. What it means is that why the stop loss was around, I think the stop loss was around 42%. The take profit was way more, about 600 and something, or maybe 500 and something, 622%, something like that. But I can't remember right now. But I know that it was 1:17. So this kind of trade, if let's say I use $100, if I'm losing $42, I am making this $622. So if I make $622, before I will lose 2-3 trades again that will eat into this profit, I have made another profit. Sometimes I use 1:4, 1:3, 1:6. So if I'm losing $10, I know that if I'm making money, I am making $20, I'm making $60, I'm making $30. So in that way, if I lose one trade, lose second trade, lose third trade, if I win only one, I have recovered all the losses and I have made profit. That is the proper risk reward ratio. And now, how do you allow that to play out? Some people are quick to close their winning trade, but they will leave their losing trade to hit stop loss. So if you're in a winning trade and you've analyzed the market and you see that this one is going to hit your TP, there is no point to rush out. Allow it to play out. For instance, if you look at this trade, to my group. I like this my group. Of course, in my group, I have to put it. So if you're not in this group, please just join the group so that you can also join us to make money. We are doing a whole lot of amazing things here. Now, if you look at this particular one, let me see. Okay, I don't know if it was here I posted it or it was in the academy I posted it. Okay. I don't think if it was here. I think it should be in the academy. But if you see what I'm saying, you can see here $10 is giving you $37. That means here the trade went to 422%, which is what? $42. So in the academy, I told them that this one we are going to hit TP on this one. So I waited it out and it finally hit the TP. You get. So if you see a trade that is going to hit your TP, allow it to hit your TP so that you make more money from that trade. Except you see that the trade is struggling, then you can take partial profit and wait and see what happens. If it doesn't move, then you close out all the trade. So these are the things you need to understand about risk management so that in the long run, while you are still losing money, because you will lose money from trading, that is the hard truth. But what helps you to become successful over time, to move, let's say $50 or $100 to $1,000 over time, is your proper risk management level. Because some people enter this market with the hope that with their $100 they can just make $1,000 within 1 month. It's possible and it's also not possible. You get. So you need to understand all of these things. Why you are thinking of moving $100 to $1,000 within 2 weeks, within 1 week, within 1 month, you should understand that you are going to use high leverage to meet that. And if that high leverage doesn't work for you, one bad trade or two bad trade will lose that money for you. So instead of that, why not fund your $100 and allow it to just run gradually, and over time you see that $100 has turned to 1,000 or even more for you as a trader. So guys, this is it for me in this particular lesson. Till I come your way again, remain blessed.